Welcome to the deep dive. Today we're really plunging into a fascinating company, Palantir. Specifically, we're looking at its stock, PLTR. This is a company that sits right at that interesting crossroads of tech, big data, and defense operations. It's a name you've probably seen around, maybe heard about, known for these really powerful data platforms, but also, often in the news for its stock being quite volatile. So our mission today is to unpack the current state of Palantir's stock. We'll look at, what the market trends seem to be showing us, and then dig into the underlying financial health, what's really going on there. It's definitely a complex picture, some pretty surprising facts involved, actually. We're here to help you make sense of it.
Indeed. And we pulled together information that really highlights the different forces acting on Palantir right now. Everything from its chart patterns, which tech analysts watch closely, to its fundamental valuation metrics, and of course the latest news that can really swing things. It's a really compelling case study, I think, in what drives a stock like this in today's market, especially one tied so closely to AI and data.
Okay, let's get into it then. Let's unpack this. For a lot of people looking at a stock like Palantir, the first stop is often the charts, the technicals. So starting there, what are the charts telling us right now about PLTR? Especially with it trading around, $132?
Right. So if we zoom out first, look at the monthly time frame. Palantir is undeniably in a strong bullish trend. No question there. It's consistently setting higher highs, higher lows. It's broken through some key resistance levels pretty decisively. But here's what's interesting. Despite that obvious strength, the monthly RSI, the relative strength index, it's actually indicating an overbought condition. And that often suggests, that the buying momentum might be getting a bit stretched. It could mean a pause, maybe even a correction is on the horizon.
Okay, so a strong climb, definitely upwards, but maybe running a bit hot on that longer time frame. A potential signal for a breather, you said. Does that picture change much when you look at a shorter time frame? Like, what about the weekly chart?
Yeah, good question. Because zooming in can give you more detail. On the weekly chart, we actually see a strong bearish divergence in the RSI. So the price is making higher highs, but the RSI indicator isn't confirming that momentum, it's making lower highs. Now, that's an interesting signal to watch, even though technically the stock is still trading comfortably above its 50-period EMA, the exponential moving average, which usually acts as support. So yeah, it's a bit of a mixed picture technically. The trend is still up, but there are these warning signs in the momentum indicators, something for you to weigh up.
Right, mixed signals. And here's where it gets really interesting, I think. Drilling down even further to the daily chart. Apparently, Palantir has been trading inside a rising wedge pattern since about May 2025. It's been bouncing between the upper and lower lines of this wedge pretty consistently. Now, what does that kind of pattern typically mean for where the stock might go next?
The rising wedge. Yes, that's a key pattern to watch. It often signals that upward momentum is sort of compressing, potentially losing steam. So this raises a really critical question. If the current upward push continues and the price stays within that wedge, we could possibly see it test the upper resistance line of the wedge. That's sitting somewhere around $150, maybe the next few weeks. Yeah. However, there's the flip side, and it's important. If the stock breaks down and closes below the lower trend line of that wedge, which lines up with support around $119 right now. Well, if that happens, you typically expect a pullback, probably towards the next key demand zone, which looks to be around the $100 mark.
So we're really approaching a potential decision point based on that pattern, a breakout higher towards $150 or a breakdown towards $100.
Exactly. It's approaching these critical levels that could really dictate the next significant move. It's definitely one to watch closely on the technical side.
Okay, so the charts suggest a major move could be coming, but charts tell us what's happening, maybe not always why. For that, we need to pivot, right? Look at the company itself, the fundamentals. Palantir is trading near $132, but what's the underlying health look like? What's the value proposition here for you as an investor?
Right, and when you shift to the fundamentals, what immediately jumps out are the valuation metrics.
Yeah.
They're extremely steep, to put it mildly. For instance, its PE ratio, price to earnings. On a trailing 12-month basis, it's around 550. 550. And looking forward, investors are paying almost 246 times projected forward earnings. Now, just for context, if you look across the tech sector, even for growth companies, the average PE is usually somewhere in the mid-20s.
Mid-20s versus 246 or 550. That's an enormous difference, a huge premium.
It's a staggering contrast, yeah. It tells you investors are pricing in a massive amount of future growth and success.
Okay, that's almost hard to wrap your head around. So what do the more, let's say, conservative valuation models suggest? Things like discounted cash flow. Do they get anywhere near that market price?
That's where the disconnect becomes really stark. These models, the DCF models from places like valueinvesting.io, Alpha Spread, Guru Focus, they try to estimate intrinsic value based on future cash flow, stripping out the market hype. And their estimates, they put Palantir's intrinsic value somewhere between just $5 and $16 per share.
$5 to $16, compared to trading at $132.
Exactly. Which implies, according to these traditional models, that the stock could be overvalued by something like 80 to 95%.
Wow, that's a massive gap between the market sentiment and these fundamental calculations. Really highlights the debate around this stock. But okay, valuation aside for a second, let's look deeper into the financials. What about the balance sheet? Is it solid? Are there positives there?
Yes, absolutely. The balance sheet actually looks quite healthy. Palantir keeps its leverage pretty modest. Its debt-to-equity ratio is low, around 0.22, so they're not overloaded with debt. And importantly, their current ratio is very strong, nearing 6. That suggests excellent short-term liquidity. They have plenty of current assets to cover the short-term liabilities.
Okay, so good liquidity, manageable debt. That's a definite plus.
It is. From that perspective, the financial structure looks sound.
But what about actually making money? You mentioned the PE ratio is sky high. Does that tie into their current profitability or lack thereof?
It does connect, yes. While the balance sheet is strong, profitability is still relatively narrow, especially when you consider that huge market cap. Their trailing 12-month free cash flow, the actual cash generated after expenses and investments, is around $304 million. And net income for the last full year was about $468 million. Now that's on roughly $2.2 billion in revenue. So the margins are thin. They're generating revenue, yes, but not converting a huge percentage of it into bottom line profit or free cash flow yet.
So investors are clearly betting heavily on future profit growth, not current earnings power.
Precisely. The current valuation demands a massive acceleration in profitability down the line.
Interesting. And who actually owns Palantir stock? Is it mostly big funds or is there a different kind of mix? Does that tell us anything?
Yeah, the ownership structure is quite concentrated, which is noteworthy. You've got large institutions like Vanguard holding around 9.4%. Peter Thiel, the co-founder, still holds a significant stake, about 7.2%. BlackRock's got about 4.7%. And the CEO, Alex Karp, holds around 2.5% himself.
So significant insider and institutional holdings.
Right, which can suggest long-term alignment. But it also means a fair chunk of the publicly traded shares, the float, is likely held by retail investors. And that heavy retail involvement can definitely contribute to the stock's volatility. Retail sentiment can shift quickly, amplifying moves.
Okay, let's bring the recent news into this picture. Back in June 2025, Palantir actually hit new all-time highs, around $144. That was after a big announcement about an AI nuclear partnership. Sounds like a major win, right?
It certainly was a significant announcement, and it definitely fueled that rally to new highs. This partnership was with a key player in the nuclear energy sector. The idea is to use Palantir's AI, specifically their AIP platform, to improve efficiency, safety, data analysis, all within that very complex nuclear environment.
So applying their tech to a really critical, highly regulated industry.
Exactly. It really showcased their ability to embed their software in these sensitive, high-stakes areas. It signals continued expansion into these valuable, kind of sticky contracts. It reinforced that narrative of them being a leader in applying AI to complex, real-world problems.
A strong proof point for their strategy. But despite that positive news and the strong revenue growth we talked about, 39% year over year in Q1 25, the stock still pulled back about 15% after those earnings. How do we square that? Strong growth, big partnership, but the stock drops. What was the market worried about then?
This really brings us back to that core tension. Growth versus valuation. While the 39% revenue growth was definitely strong, that pullback was largely driven by those persistent concerns about the valuation. Remember, at that point, the PE ratio had ballooned to around 561 times.
Even higher, wow.
Yeah. So investors, even seeing good growth, seemed to balk at that extreme premium. It just highlighted how sensitive the market is. Even strong results might not be enough to sustain those kinds of multiples indefinitely. Any hint of growth slowing, or just the sheer height of the valuation, can trigger selling.
Makes sense. It's like walking a tightrope at that valuation level. So, given this whole complex mix, strong growth, strategic wins, but these huge valuation concerns, what are the analysts saying? Is there any consensus view on Wall Street?
Oh, definitely not. Analysts are really quite divided on Palantir. It perfectly reflects the high stakes, somewhat speculative nature of the stock right now. On one side, you have firms like Wedbush. They've actually named Palantir a top pick for 2025. They're focusing on the AI momentum, the stickiness of its government and commercial deals, its potential to be a key software layer for big organizations. They see a long runway for growth.
So the bulls are focused on the long-term potential, the tech leadership.
Right. But then on the other side, you have plenty of analysts warning it might be, caught up in a tech bubble. They point to those unsustainable multiples, arguing they just can't be justified by current or even near-term earnings potential. They raise questions about how scalable some of Palantir's custom solutions really are, potential competition down the road from bigger tech players, the unpredictable nature of large government contracts. They basically argue the hype might have gotten ahead of the financial reality.
So a real split. Bulls see transformative growth. Bears see unsustainable hype.
That sums it up pretty well. A polarized view.
Okay, so putting this all together for you, our listener, we've got these bullish chart patterns suggesting a potential big move, but fundamentals that scream overvaluation by traditional measures and analysts who completely disagree on the outlook. What's the practical takeaway here? How should someone think about approaching Palantir?
Well, I think it crystallizes Palantir as a classic, high-conviction, high-risk kind of stock. If you truly believe in its long-term story, its dominance in AI for defense and complex enterprise problems, if you see its tech as having a durable competitive advantage, a real moat, and if you think that strong retail interest will continue to support the price despite traditional metrics, then maybe you could see it as a speculative buy, probably just for a smaller part of a well-diversified portfolio, mind you.
But for the more cautious investor.
Right. For more traditional value-focused investors, those who prioritize things like proven profitability, strong cash flows now, reasonable valuation multiples, that inflated market price and the still thin profit margins would suggest exercising a very high degree of caution. It really boils down to your own investment style, your time frame, and frankly, your tolerance for risk and volatility.
What an incredible deep dive. It really highlights the contrasts with Palantir. Impressive trends on the charts, hinting at maybe more upside, but simultaneously these valuation numbers that just seem, well, astronomical by conventional standards. A real paradox.
Absolutely. And understanding both sides is key, isn't it? The technical price action, the what and the underlying fundamentals, the business strategy, the valuation debate, the why. Palantir is just a fascinating example of where cutting-edge tech, strategic importance in AI and defense, and strong growth meet this incredibly high market price tag and still relatively modest current profits. It really challenges how we think about valuing companies today.
It certainly leaves us with a lot to think about. Palantir is going to remain a hot topic, I suspect.
And maybe that leaves an important question for you, our listener, to ponder. Given Palantir's unique position, its technology in AI and defense, does its current market valuation maybe signal a shift? Is it redefining what value means in this fast-changing tech world? Or is it more of a classic example of market enthusiasm, of speculative excitement that might eventually need to reconcile with those fundamental anchors? Something to definitely mull over as you continue your own journey of discovery and analysis.